Welcome back to episode 2 of the Real Estate Standard. I'm Tim Kotzman. I'm here with Kenny and Chris. We've got a diverse set of headlines to get to today, but first we're going to go over to Kenny for a few updates on the website.
Thanks, Tim. We got the West Main self-storage dashboard up here, just taking a look as we start the week. Have the live Bitcoin price at 85,000 as we're recording. So it's a good time to be DCAing. West Main self-storage, where our DCA hits on Tuesday, so that's going to be tomorrow. We can scroll down here and we can see that it looks like we're going to be around 10 million sats, so 10% of a Bitcoin for the weekly purchase next week. Maybe even 11 million, depending on how far down this drawdown goes.
What's the how many sats per square foot are we at right now, Kenny, total?
So as of today, the sats per square foot, which is kind of a funny metric. Let me find it. We're at 2,660 sats per square foot. And it's maybe I should add another metric here to show like how many months of mortgage payments we can service with our Bitcoin. That's sort of a new metric on the strategy dashboard where they show how long they can pay dividend payments with their Bitcoin.
Like it.
Anything else on the dashboard we want to look at today?
No, I just like seeing the accumulation progress. First and foremost.
Yeah, great. Yeah. I mean, I'm actually kind of excited to talk about our real estate standard website, which I did some work this weekend with the help of AI. And I built off of Sailor's 24 model, the one that Jesse Myers, who's over at the Smarter Web Company, he created this tree map that everybody knows, displaying the $900 trillion of global wealth. And we built on it by adding the real estate breakdown, where all the real estate's located by country and then also by sector. And then I'm a little biased, so we did a self-storage breakdown, but I wanted to walk through this. One of the interesting things I noticed is the US is number 2 when it comes to the value of all the real estate in the world. That China actually has more than double the value of US real estate, which is currently at 48 trillion. And if we look further, we can see that single family homes are representing the majority of that, and then multifamily, office, retail, industrial, manufacturing, hospitality, they're the outliers, along with healthcare, data centers, and self-storage. Yeah, so this was kind of fun to make and just kind of get an idea of the different sectors and pockets that are going to get tapped as far as the real estate standard, where property owners are going to start using their cash flows to stack, and which parts of the world we could really make a dent with first.
Yeah, that's interesting. Can you go back to real estate by country, Kenny?
Sure. Now, I double checked as much as I could. So we're kind of going off of this is I was using Claude here. So this is the data that Claude gave us. And so if there's anything that looks suspicious to you, let me know, because some of this stuff caught me off guard. You wanted to see by country or sector?
No, this is perfect. Just by country. I mean, just to be able to visualize it in this way is super cool. This real estate by country. This is residential and commercial.
I believe so. Yes, this is the total real estate. And then one thing that we were able to do is be able to simulate the you can come over to this site. Anyone can play with the settings here, and you can set the CAGR for for real estate, bonds, money, equities, Bitcoin, cars, gold, and art. And you can, have these click the bear case, the base case, and then the bull case, and you can see what that does. And then the really cool thing is you compare it. So this tree map is projecting the 2045 inputs that you've placed here, and you can compare it to where we are today, 2025 to 2024. If we have the bull case, the market cap goes to 3.4 quadrillion. And if we have the bear, you can see like Bitcoin goes to 33 trillion. So yeah, this is kind of fun to play around with. Another big takeaway from this is real estate is the second biggest asset in pretty much all these scenarios that we laid out here. I'm just trying to see where we start off. If I turn the simulation off, real estate's at 330 trillion, bonds is second place with 300 trillion. So real estate is, especially in times like right now where we're seeing whether this is a bear market that we're going through or pullback, real estate pairs very nicely with Bitcoin during these uncertain times, and it hedges to the downside. So it's like peanut butter and jelly, two hard assets go together great.
Well, this is super cool, Kenny. I appreciate you putting this together. And I'm definitely going to be playing around with that a little bit here. Put some of my own assumptions and scenarios in there. See where it all shakes out over various time horizons. I mean, and I think the time horizon piece is really cool because you have, one thing I keep pounding the table about in this discussion is that you have two long duration assets, right? Real estate and Bitcoin. And everybody forgets that. The normies are overlooking that, and they get caught up with the day-to-day volatility in the Bitcoin price. So this is actually really cool to help visualize and maybe even address some of those just hesitations, if you will.
And then I got one more surprise for you guys. I put together a BRE index, and it's just the price of a house in Bitcoin. So you can see today the average median house in the US is $420,000 or 4.89 Bitcoin. And you can click to convert to Satoshis, and you can see the live price of Bitcoin. And then the future projections is what's really cool. You can play with the same defaults, the bear, the base, and the bull case. And these are all based off of Saylor's 24 model, which was done by Jesse Myers. And you can see that the price of houses are literally going to go to zero. You have to click on it to see that in the year 2045, and this is in the bull case, that a house would be 289,000 sats. And you might say this is crazy, 100% cheaper or 99 point whatever percent cheaper. But if we look at the historical view, in 2015, the median home was 1,050 Bitcoin. So we've come down. 2017 it was 21, 2021 6.3. So a little bit of kind of it's kind of bottoming out, but 2025 4.9, and I would expect this to keep going down. It's everything is going to get cheaper in Bitcoin terms. And so this is an embeddable widget here. So if anyone wanted to, they could copy this chart and they could put it on their website or blog or article or whatever, just to kind of track the median price of a house in Bitcoin.
Very cool. Nicely done.
And if people are listening, not watching, it's www.therealestatestandard.com. Is that correct?
Yeah, that's all we have left after Google banned us or canceled our YouTube and Gmail this morning. So you're gonna have to find us. Well, X, we still have our X. Shout out to Elon for not censoring us.
All right, that means we're doing something right. That means we're doing
How do you
something
guys
right.
feel about that? Like I texted you guys this morning because I was checking the website before today's call, and I was like, "Hey, what happened to our YouTube?"
I was disappointed but not shocked because we've had other channels taken down. How did you guys initially kind of react?
Yeah, shocked. Just because because we're so new, and I mean the following is nominal, and what it's the big bad bully just picked on the smallest kid in the schoolyard, I guess. But um, at the same time, not all that shocked either. So, but that tells me we're rowing in the right direction. So, no one said it was going to be easy.
Yeah, I'm personally like honored. I'm wearing it as a badge of honor here that our we got canceled on our first episode, so doing something right.
Yeah, I mean, that's impressive. They didn't even wait till episode 2 or 21 or what have you.
They knew you were going to drop this really cool dashboard, Kenny, that helped visualize real estate values and pricing, and they were like, "No, we got to stop these guys before they get any momentum."
Can't.
Yeah, I'm wondering, do you think it was like a bot, or do you think there's actually like a human eyeballs that, go into that? Maybe we said the word Bitcoin too many times.
It's got to be a bot, some kind of AI scanner. I don't know. I mean, the email doesn't have anything Bitcoin in it. It's just the real estate standard at gmail.com. So,
And please note, don't try to email it because we're not going to get the email.
yeah, do not email us. Just DM us on Twitter, on X, excuse me. We will do our best to get this all sorted out here. We may have to migrate over to Rumble and Noster and just vote with our feet, so to speak.
I thought about that when I first saw the email come in, but I mean, part of what we set out to do was kind of bridge the real estate world with Bitcoin, and we really want to meet people where they're at. So, like, how many real estate people are on Rumble? I mean, we're gonna have to do it because we don't really have an option at this point. But we're really trying to get into the public domain where it's a relatable thing to everyday people. People live in houses. They go into buildings to buy their groceries and get their hair cut and all sorts of stuff. And we just wanted to meet people where they were at and talk Bitcoin and real estate, but we're going to have to find another outlet to get the word out.
Yeah, I think you're exactly right. Definitely got to meet them where they're at, and for better or worse, that's where the majority of folks are consuming their content is YouTube. So we gotta get that taken care of and corrected so we can continue this education process and help the entire industry.
Yeah, so I don't know if you guys want to talk about it, but something I was thinking about, we're talking about the intersection of Bitcoin and real estate, and I was thinking about appraisals and how appraisals are done in real estate. You have three different types, where one is the income approach, and it's based off the income the property generates, and that's basically commercial, how all commercial properties are appraised. And then you have the comparative comparison model, which is used in single family homes, residential, and just houses that are similar. And then there's the cost approach, which is um, to the replacement cost of a property if you had to go out and reconstruct. Um, and so I was thinking in Bitcoin, like there's, the production cost of Bitcoin, how much energy does it take to mine a Bitcoin and to like find a Bitcoin, find a block and get the block subsidy and so there's a cost to do that versus the kind of the day-to-day price, or the minute by minute price in the markets on the exchanges. And I was thinking how those are kind of, like the comparison model and then the replacement model for real estate. So I don't think we've ever talked about that. I want to get your first impression on that, Chris.
Interesting. You mean comparing the energy that's exerted to rebuild real estate versus mine Bitcoin? Is that what you're getting at?
Well, so for the in real estate, there's the three models, right, that I just went over. So I was comparing the cost approach, which is to replicate to rebuild the property is basically like the mining cost of a Bitcoin. What does it cost to mine a Bitcoin? And that fluctuates, and so does the real estate cost, right? When building materials are high, or when supply and demand, when there's a lack of supply for two by fours, the replacement cost of real estate goes up through the roof.
Yeah, yeah.
And with mining Bitcoin, you have difficulty adjustments, and it looks like I was noticing it looks like we may have a pretty big downward difficulty adjustment. Looks like there was some machines shut off, and that can, happen when price comes down. When price comes down, it becomes unprofitable for some miners to mine. Just like when prices go up on building materials, it becomes unprofitable for builders to build new buildings. So, I was really going into the weeds here, and it's kind of down the rabbit hole, but started thinking about that. I wanted to mention and run it by you.
Yeah, I mean, I think that's interesting is super interesting and probably worth an episode. The first thing that comes to mind on that is, how much more efficient of a market Bitcoin is compared to real estate, right? I mean, the labor costs, the material costs are they fluctuate, but they fluctuate, based off of the location and the market that they're in. Um, and you could pretty much go down the entire expense roll, and that's the case for every single one of those expenses in a real estate development. So yeah, there's definitely something to explore there. From a thought process standpoint, I suppose. I want to jump. Let's jump into some of these relevant news articles before we get into today's topic. And I just kind of went through and pulled up some of the, some industry resources, and just wanted to highlight a few just kind of relevant headlines. And I want to try to do this at the start of each episode, and it'll be real estate related, but it'll also be Bitcoin related, and trying to marry the two topics and industries over time. The first one I pulled up was on CoStar.com, and it's talking about the sales of distressed commercial property continuing to rise. And it's no surprise that the distressed sales market is being led by the office property type. Through September of this year, total office distress has exceeded $10 billion. That is up 32% year over year, which was quite astounding. And approximately 40% of all distress in the commercial real estate markets is related to office. So office is definitely still getting beat up the most. It's followed by apartments, believe it or not, by multifamily, a fair clip behind them, but multifamily taking the second spot in the distressed sale market. To give you a little bit of context, the distressed office volume that we're talking here is still it's still less than half of what we saw in the year 2011, the first three quarters, in the wake of the great financial crisis. So again, just for some contextual purposes, there we're still a fair bit off from those market conditions. Another topic or another article that had jumped out at me was on Yahoo Finance. Excuse me, no, Commercial Observer. Sorry about that. Commercial Observer, this is actually here in my market in Orange County, California. Core Development lands a $41 million multifamily conversion project located in Santa Ana. And for the Bitcoiners out there, $41 million real estate project is about 478 Bitcoin equivalent. And this is interesting. I highlighted this one because it underscores a broader trend in the industry across the country, for that matter. And that is demolition and repurposing of old, obsolete office buildings. And I thought this went kind of nicely with that first CoStar article because this was a old office building and it's being um, converted. It's not being demoed entirely. They're going to invest substantial, multiple $1 million into the asset. The address is 2700 Main Street in Santa Ana. It's going to be a 158 unit multi-family project when it's all said and done. It's got a heck of a location, strategically located here in Orange County, and is surrounded by a number of notable new developments and adaptive reuse projects. And I think at my count, we have 17 office buildings in the Orange County market alone since 2020 that have been they've transacted with the sole purpose of either being demoed entirely or repurposed into apartments specifically. That number would grow if I included stuff that was being redeveloped into other property types.
Just wanted to comment because you led with how, office space is basically, getting crushed the most, and in second place for getting crushed the most is multifamily. So I thought it's kind of funny they repurposed, from last place to second to last, but there's not many use cases to to their side. There's not many use cases to convert office space into. So um,
Yeah.
just just wanted to point that out.
No, I'm glad you did, and that was something that I kind of noticed myself. I wasn't going to say anything, but yeah, it's interesting that that's the play, so to speak. The All of these properties are being redeveloped and renovated, and they're going to be, with the hopes or with the intent of charging top of the market rents. And I'm not an apartment expert, but I have been scratching my head on, where all of these, top of the market renters are going to come from. Um, I mean, when you look at some of the numbers and the demographics and the makeup of some of these submarkets, I have no idea where these renters paying again top dollar for 1 and 2 bedroom apartment units are going to come from. So it'll be interesting to see how that cycle plays out. Okay, so on Yahoo Finance, this was a couple months ago, but I wanted to bring it up anyway. This kind of dovetails with this combines real estate and Bitcoin. If you're familiar with the platform Open Door, it's a residential real estate marketplace. They announced on October 5th of this year that they are going to um, allow and facilitate crypto, quote unquote, crypto payments for not only rents, but also sales. So I'm excited to see this. This is a major player in the, kind of the prop tech space, if you will, as far as offering online marketplaces for real estate. And the it'll be interesting to see how this one plays out. I hope the market takes to this concept, and people use this option as a means of payment and medium of exchange. There's obviously going to be some hurdles along the way and some I don't want to say curveballs, but there'll be some learning opportunities along the way for both the Open Door team and its users. But it's definitely a step in the right direction in my eyes.
Yeah, if we could get someone like Airbnb to do it first, or come on second and do it, I think that might be a little bit more easier to, like, because buying and selling, you do that, very seldomly. It's not like every week you're going out and buying a house, or every year you're going to buy a house, but you may go to a conference and you may need a hotel or an Airbnb. Um, so hopefully others will follow and see what Open Door is doing. I don't know if they do leases that much. I haven't really used Open Door, but I might have to now that they're becoming a Bitcoin company. I think that's what a lot of businesses can leverage, that there's a very loyal Bitcoin community, and they will leave for Bitcoin services. So I typically use for residential. I'm surfing, on Redfin is normally the go-to for residential. But if Open Door is gonna, put Bitcoin first, maybe I'll, go over there and check out houses on Open Door first.
Yeah, I agree with you. I think I was having this conversation with a friend of mine who's in the residential space recently, and just beyond the payment component. I mean, I think this entire this vertical, this strategy of Open Doors is more geared toward tapping into the wealth, the crypto and Bitcoin wealth that's been generated and will continue to generate. They look at it as the new and ongoing buyers and sellers of real estate over the next decade, right? Which makes sense. What I was telling my residential friend was it'll be interesting to see how particularly some of these millennials and Gen Zers approach this. Do they leapfrog that quote unquote starter home and you know go for the middle of the market right away versus going into that entry level starter home, maybe a little bit more conservative on the house and the price point, the overhead, versus again just kind of diving straight into the deep end and going for the all the bells and whistles. So it'll be interesting. I think it'll be interesting to see how the market takes shape around some of those buyers, some of that buyer pool. I'm sure the residential real estate agents, that's music to their ears, to say the least.
Right.
And then last but not least, this one's on CRE Daily. Again, from back in October of this year, blockchain real estate gains momentum in the commercial sector. This one grabbed my attention for a particular reason. Basically, what they're talking about here is how the technology, how blockchain how the blockchain technology can improve real estate through lower fees, greater transparency, and ultimately less risk. So what they're talking about here is, being able to access, store and trade property records, mortgage info, deeds, insurance, all of that stuff. So, and that's going to be, that's going to play out slowly over the next decade plus. But I was really glad to see CRE Daily publish an article on this particular topic and really just getting away from, the clickbait price numbers and payment topics, all of that, and really start to go another layer deeper into the industry of how blockchain technology can improve real estate. Again, I keep saying that Bitcoin is a new tool. It's a new innovation that improves the real estate asset. And I haven't talked a lot about this particular topic, but this is yet another example of how you can achieve greater efficiencies, greater transparency, and ultimately protect yourself from fraud and tampering and all the other um, just challenges that come up with the traditional analog system. So that'll be an interesting just topic to monitor over in the future, and I'm sure we'll be talking about it again here, guys.
Well, I'd like to give some pushback on this subject, because I'm not totally convinced this is right around the corner. Um, when we say blockchain is basically just an open a ledger. It's an open database that costs money to write to, and anyone can write to it as long as they spend the money to write to it. And when we think about like putting properties on the blockchain, there has to be a centralized issuer. Like there has to be, because you don't want your house to get stolen and the deed is transferred. Like it's all gonna be who's writing to this blockchain. And if the answer is, well, it's the city or the town or the municipality, or maybe it's a third party company that is authorized by the city or the town to update these records, there then there becomes no real reason for it to be like a public blockchain. Like there, I mean, maybe to to like so everybody can look it up easier, but blockchains are an expensive database. If it's going to be centralized, if there's going to be, few people that can write to it, and then, it kind of muddies the water because these companies doing this, I think Proppy was another company looking into this. They're going to be using something like Ethereum or like another platform to help them carry this out. I know that there's been you know uh, stuff going on in Bitcoin with as far as doing more data on Bitcoin, which I'm not really a fan of. But I think the value proposition here isn't as great as it sounds. Like I think like in theory it sounds good. Oh, everything will put properties on the blockchain, and then I can sell you a building and transfer you the deed right on the blockchain. I think it opens the door to kind of fraud and scams a little bit. So I'm just hesitant there. I'm not saying it's not the future, but I just kind of get skeptical. So I like to play devil's advocate and do a little pushback there.
Thank you. Yeah, no issue on that. I had not put a ton of thought into it, like I said, and I think that's completely, viable feedback. I mean, yeah. I mean, how do you just off the cuff, Kenny? I mean, how would you see something like that playing out? Whether it's on, something on Ethereum or otherwise, or maybe it's a private, the city of Los Angeles has their own private, blockchain for, these record purposes. I don't know. I'm a little bit out of my depth here, to be quite honest with
I
you.
mean, that's kind of like what we already have, right? Like if you go to each town and you have to go into the zoning board and their planning board, and all their information is local, and it's centralized at the town hall. And they might have a website which you can look up the property. Most towns these days have an online database that you can search for the property, pull up records, and they basically have their own blockchain. A blockchain is just a database, right? They have their own database. It's just that nobody else can write to it. They're the only ones that can update that database. And the benefit of a blockchain is that anybody can write. So that everyone has read and write access as long as you're paying, like with Bitcoin. If you want to move some Bitcoin, you have to pay to move it. You have to pay um, right now, sats per virtual byte is, something like 3 sats per virtual byte. So you have to pay Bitcoin to send and move the Bitcoin across the network. And that is because like Satoshi wanted to give everybody write access. As long as you pay for it, everybody can write to the blockchain. With a property database, with like a deed database, we don't necessarily want everybody writing to the database, right? Like we want to make sure that that somebody didn't sell the property deed to your property in the middle of the night, and your phone got hacked or something, and now guess what? You're getting evicted from your own house because somebody was able to edit the database. Um and these databases are like these blockchains to just use it as a database. It's wildly like costly to do so. Like we look at the cost of the Bitcoin network, and the reason we're okay with that is because um, it's like security of the network to like you got to spend to write. And so if everybody was spending, like another downside was if everybody's spending to write, like it's going to be very costly to record these transactions, these sales. It's going to be more costly than having a centralized guardian issuer kind of person.
Gotcha. Okay, so that I get that's super helpful. I mean, one of the things, again, I haven't spent a ton of time on it, but one of the things I was, had some excitement was what you just mentioned, right? Like how can those systems reduce some of the fees and the friction of doing a real estate deal? I mean, there's so many intermediaries in a real estate transaction. There's got to be ways to make that more streamlined and efficient, and ultimately reduce costs. If I'm hearing you correctly, that may not blockchain's not the solution there.
Yeah, I think that like blockchain is the buzzword there. Um, I think that there is like I think the tokenization we briefly discussed that. Like I think that is kind of a might be like the way to think of it, because I don't know if those actually require like I'm sure that they're going to have a blockchain too, but I don't know. I kind of go back and forth. I think in the future there'll be like maybe somebody will figure out the puzzle and put all the pieces together, and it works and it's efficient and it's a separate blockchain, or maybe it's tied to Bitcoin with Taproot um, addresses. I think that's where like the Bitcoin community is kind of divided on like having like smart contract capabilities tied into to Bitcoin to be able to do things like this, and it's kind of already possible with the Taproot activation that occurred, I think, almost 4 years ago now. And whether we get these types of products built on top of Bitcoin or if they get their own blockchain in the future, I think it's kind of like a distraction. It's kind of like shiny object syndrome, like where we're chasing after something that, it's a nice to have, but it's not a necessity.
Yeah.
Um, and I think like there's more important things to work on. I'd rather see like these collateralized products come out, like with what some of these banks and lenders are doing. I'd rather see, those products and features get built out first. Um, that's just kind of more useful and interesting, but
Yeah, I mean,
nevertheless, it's good to explore.
yeah, I think you're kind of this is coming full circle from the live stream last week, right? With the gentleman from Brazil who was, asking us about tokenization, right? And I think the exact advice or feedback I gave him was, we have, that's the tokenization is downstream of, these bigger opportunities, these bigger problem sets that need to be addressed first. And starting with Bitcoin and integrating Bitcoin into your property portfolio and operations is the starting point. Worry about the rest of it down the road. Is so there you go. I kind of answered my own questions, I guess.
Yeah, the low hanging fruit first, and then that one's kind of way up the tree, and after we snatch all the low hanging fruit, maybe like let's revisit it then and see if it makes sense.
Yeah, definitely. Um,
Two quick notes before we maybe go into collateral. I know we have just a few minutes left, but my personal opinion is that people use the word blockchain instead of using the word Bitcoin, and maybe that's just maybe it's an incorrect view. I'm sure you guys probably saw today SEC Chair Paul Atkins said public blockchains are more transparent than any legacy financial system ever built. That seems pretty self-evident to us, but probably a sign of the times and on topic to mention that. And then just a few minutes ago, I see on the screen in front of me, it's just like the reposts and the likes are going through the roof. One, to get your real time feedback, both of you, on the news that just hit the wire. PayPal just submitted an application to become a U.S. bank.
Okay.
I thought they were pretty much already a bank, weren't they? They must have had some banking license to be able to do those peer-to-peer transactions in the closed system that they were doing, but kind of already thought of them as somewhat of a bank.
Yeah, I just think of PayPal as you can buy Bitcoin on PayPal. So if then they're a bank and you historically have used banks to either transact or possibly, right, to originate a mortgage for and many different things in the real estate sector, thought that was kind of an interesting kind of Bitcoin real estate digital sort of news item for us.
Yeah, absolutely. I mean, do we know offhand, does PayPal own any Bitcoin themselves?
I
No.
haven't really, I knew that PayPal offered, people to buy Bitcoin, but I didn't really kind of stay on top of them. I know that they had kind of like trap Bitcoin where you couldn't withdraw it from their platform. I don't know if that's changed since, or if they've been building out on their Bitcoin products, but I'm gonna have to give it a second look now that Tim brought it up.
Yeah. I mean, it looks like there's some articles here from back in 2023. They disclosed nearly $1 billion in crypto assets on balance sheet. I don't know what those crypto assets may be. Bitcoin, Ethereum, Bitcoin Cash, and Litecoin.
Yeah, I see that Blockworks article. But yeah, whether they actually have something that's not on behalf of the users, I'm not sure.
Yeah. I mean, I guess to your question, Tim, that's great news.
Well, yeah,
That's exciting, and as far as I'm concerned, they're the second or third mover, and it'll be interesting to see, what model they pursue and what their trade-offs are. So that's it's good in the grand scheme of things. But I'll read up on it and maybe have some more thoughts for the next one here.
awesome.
Okay, let's jump into just Kenny's favorite topic, that is collateral. This has become the biggest talking point, I think, not only in the Bitcoin ecosystem over the last couple of months, but I've personally shifted my opinion on how the real estate industry gets onboarded into Bitcoin. And I initially thought it was going to be the treasury strategy, but with all the uh, uh, changes and regulatory hurdles being removed, all these big banks the last couple of weeks making announcements of Bitcoin backed credit products. I'm increasingly thinking that the real estate industry is largely going to be onboarded through the financing avenues, and I think this is super exciting. I think there's a lot of opportunity here for lenders and borrowers to not only better align incentives, but get really creative with the products that they structure. Um, I've talked about a couple different options, a couple different ways of doing it over the last handful of months. You can take it from the refinancing angle or the new acquisition angle, but um, I'm excited to see this particular sector grow and mature here. And Kenny, I don't know if you have any thoughts here. I'm happy to run through, one of my preferred examples for the market here, but a really simple example for those of you that already own real estate and you already own Bitcoin. There are lenders out there today that will allow you to refinance your property using the real estate and your Bitcoin as part of the credit structure. And just a quick example here, you can think of like a 60-40 LTV scenario where you can pledge, call it 10% of the capital stack in Bitcoin. And in this scenario, the lender still has a senior lien on the real estate, but they now have this additive, more liquid layer of collateral, right? And this is important because it improves their downside protection on the overall deal. You as the borrower, you're able to preserve your fiat reserves, your working capital. The loan terms can be improved, and both parties are able to either maintain or access exposure to the Bitcoin upside. So the Bitcoin, I want to just a couple points here and we'll wrap it up, Tim. The Bitcoin is held in a multi-signature wallet. It's held in qualified custody. Neither party can move it unilaterally. So unless there is some kind of foreclosure or distress situation occur, the Bitcoin's not moving. It's locked for the term of the loan, and then the borrower and their lender can they both participate in the upside at the maturity of the loan. So we're talking 5 to 10 year time horizons. So the Bitcoin is locked into this long-term credit structure, which is essentially going to introduce duration into the asset. So the underwriters can now track this, right? They can say X amount of Bitcoin is locked up for Y number of years, and they can effectively calculate the free float from there. So this is going to create a forward-looking duration curve for Bitcoin, and it's going to give these underwriters and institutional players predictability, right? The volatility is not going to disappear, but it's going to become a lot less erratic and less reflexive because the Bitcoin is locked up for long duration periods. So I know I ran through that really, really quickly. We'll revisit this in future episodes and bring on guests that are, living and breathing this particular segment of the industry. But, my thoughts here, don't sleep on this. This is coming fast and furious, and it provides real tangible solutions to, a big problem. And I view it as the real estate industry's bridge from the old system to the new.
Yeah, real quickly, I'll say that, I think the dual collateral is the way to go. And I think I forget the name, I think it was like Salt Lending or something. I haven't really been following them. I think the one thing is, when real estate, when you borrow against real estate, there's an appraisal done at the closing or, before the closing. And that's the price of the real estate. And it doesn't change minute to minute or day to day or month to month. The appraisal is good for the loan, and until there's a refinance or a sale, that appraisal is basically the price of the asset as far as the bank or the lender is concerned. With the Bitcoin loans, Bitcoin being volatile and going up and down a lot, I think the risk is, a margin call, kind of a loan coming due unexpectedly. But I saw that this company has like a product called Shield, in which you can pay a flat fee and like, not have to worry about like margin call. There's no price that Bitcoin can fall to where your loan will become due. And so I think as the market matures and we see more players enter the space, I think products that protect and Bitcoin to the downside in events where that what we're seeing today is happening, where you have a drawdown in Bitcoin price. You don't want to have real estate owners, panicking and freaking out that their property could get foreclosed on, or that their Bitcoin could be sold to cover the mortgage. So I think having a product that you know that appraises the Bitcoin at the time of loan, this is the value of the Bitcoin. We're not going to mark it up or down for 4 years, and have like some kind of time period where the real estate investor can be rest assured that their loan isn't going to come due because the price of Bitcoin went down 40%. And maybe we can dig into this more on our live stream later this week.
Absolutely.
Yeah.
I'll close it out with a quick item that, again, just came across the wire that's really a sign of the times. The NASDAQ just prepared a filing to extend stock trading hours to 23 hours on weekdays. So the future is coming fast. For Chris and Kenny, I'm Tim. This is episode 2, and we'll see you on episode 3. Thanks for listening and watching.